Hi everyone, this is Barbara Carney, Realtor, and I am here with Ryan Stoll with Finance of America Mortgage. And today we're going to talk about the basics of credit fundamentals. So we want you to understand the types of things you're going to need when you purchase a home, and credit score is one of those things. So I'm going to hand it over to the expert who can help us with that, and hopefully we can answer some of your questions. All right, Ryan, go ahead.
Well, thanks, Barbara. Yeah, hey guys, when you're looking at credit, a credit score is the one way that a lender is able to classify you or put you into a bucket in terms of risk. And so the theoretical range between on your credit score is 350 to 850. So 850 being the highest, 350 being the lowest. And obviously the higher you are or the closer to 850, the less risk you present to a lender. So how do you go about, you know, building your foundation on a credit score is, one of the ways is, it sounds pretty simple, but just make your payments on time. Each of your creditors is going to report that information to the credit reports, and that's how you build your credit, history, is by them reporting positive information such as, but negative information such as missed payments or late payments will actually pull your credit score down. So making your payments on time is probably the biggest, hurdle that a lot of people go through, and it sounds pretty basic.
Mm-hmm. Okay, good. Well, so can you give us an idea of some other things that we can do? Like, say I'm a younger person and I need to build up my credit score. What type of things can I do to help with that?
Yeah. So, the biggest thing I see is just with a lack of credit depth. So if somebody's going to try and go out and get a credit cards are a great way to manipulate or maneuver your credit score quicker than, say, an installment loan. So an auto loan or a student loan, there's only one way to, help that credit score, and that's to continue to make your payments. Credit cards give you the opportunity to pay your balance up and down, okay, and some more flexibility there. Um, what I caution people on is if you can get two of the major four credit cards, so MasterCard, Visa, American Express, or Discover, if you can get two of those major four and have regular activity, that helps build your credit depth. Okay. But now a word of caution is what you want to do is keep your balance less than 50% of the limit at all times. Ideally, if you can keep it less than 30%, that will raise your credit score. So if you have a credit card limit of $1,000, ideally you're going to want to keep that balance at $300 or less at all times. Okay. Now, a common hurdle that I hear people do or see people do is, let's say they get a credit card that has a $500 limit. They'll put $500 on it and then pay that bill off when they get the credit card statement each month. So even while they're being credit responsible, what happens is the statement date and the date the creditor reports to the credit bureau are two different dates. So what actually happens is they're hurting their credit score by putting that much of a balance on each month, even though they're paying it off when they get the
Okay.
bill.
Now, what about if I charge on my credit card each month and I just pay off the complete balance? Is that a good thing, or do I need to leave some sort of balance on there?
You know, it's really up to whatever you want to do each month. I think the bigger thing is being able to carry a debt load is a good thing in terms of showing your ability to manage debt payments. Somebody that pays cash for everything, for instance, but now wants to borrow, $150,000, that's going to be difficult to display that they have the ability to make a payment. So,
Okay.
having a manageable debt balance is a good thing. But really it's kind of up to each individual person if they want to pay that bill off each month. But as long as they're having regular activity on those cards, that's a great thing.
Okay. So how, as a younger person, how would I know, like, how much debt I should have?
Mhm. It
Like,
really the best thing they could do would be, budget and figure out,
oh,
how can they.
30%?
Yeah, exactly. The 50-30-20 rule. So from our last video, but creating a budget to help develop, you know, where they think they can, extend their spending or cut spending.
Okay.
That's going to be the best way for them to determine what debt loads they can manage.
Okay. All right. Good. Um, is there anything else you want to add?
No, I mean, I think credit is a living, breathing thing. It constantly changes, constantly evolves. So staying on top of it, but continuing to have activity is a good thing. One credit myth I will tell you is that people think if I have too high of a credit limit on my card, that's a bad thing. That's completely false. That works on that ratio. So a lot of times the higher limit you can get, the better. And if you can reach out to your credit card companies, every 6 months or so, maybe once a year, you can ask them for a credit limit increase based on your payment history. You don't need them to pull a credit report just to give you a credit limit increase. The worst thing they're going to say is no, but the best thing they'll say is yes. So,
Okay. So if I apply for a credit card and I get it, um, can I call them and like say I don't even know what my credit score is? How would I find out what that is?
yep. So you can go to, freecreditreport.com. You can call each of the credit bureaus. You're entitled to get a free credit report each year. So whether it's Experian, TransUnion, or Equifax, you can inquire directly to them, and it's a soft inquiry, so you're not opening new credit, and you can see what your credit score is through that creditor or through that
Okay.
credit bureau. So great thing to do. I highly encourage people to do that at least once a year because it helps them see what's on their credit report. And if there's any, misinformation, fraudulent activity, gives them an opportunity to look into that right then.
Yeah, yeah. Okay, well, one more quick question.
Yeah.
So if I want to go purchase a home, what is the number or credit score I'm looking for? What would be a good range to hit?
Yep. Ideally, the ranges do fluctuate, based on, different guidelines. The minimum credit score you're going to need is right now is a 620. And then as you peer up from there, a lot of it depends on the program that you're in, down payment. But the best thing they can do is consult with a mortgage professional to run them through a pre-approval to help them determine, is there stuff that they could do in the short term that might be able to boost their credit score higher? And that might put them into a different program, give them a better rate, all of that. And sometimes that activity can be done fairly quickly to help boost their credit scores in a short manner.
Okay, good. And of course, Ryan can help you with that if you are curious if you're able to purchase a home or not. So I will put all his information below so you can contact him if you have any questions. So, well, thank you, Ryan. I appreciate it. And hopefully,
Anytime.
we have helped somebody out there. And we will work at continuing to do these for you so we can help educate you. So,
Perfect.
have
Call
a
me for
good
details.
day.
See
All
ya.
right. Bye.
Bye.